why banks want you to refinance your house at a lower interest rate. You think they want you to refinance at a lowest interest rate because they care about you having a lower payment. Yeah, we want to help you out. We're going to give you when you refinance your house at a lower interest rate, you just started the whole 30-year amortization process period over again, and the majority of the money that you pay in the beginning of the loan, the majority of it goes to interest. So even though your interest rate is lower and you're making a smaller payment, you're paying them more interest over time than you would have had you not gotten a lower interest rate with a small. Instead of getting a home equity loan, or instead of refinancing your house, get a home equity line of credit and use your line of credit to pay your debts and your bills. And then
this guy started quite well with his speech about the banks wanting you to refinance. The math kind of makes sense. You pay more interest in the beginning of the loan, yes, but then the transition to getting a HELOC instead of refinancing the whole mortgage doesn't really make sense, because he doesn't touch on the fact that you might have a high interest. Let's say if you have a 6% mortgage and you could refinance that and drop that to 3%, and as well get a readvanceable line of credit with that you can use and reuse by basically recycling the equity that you pay as part of the mortgage payment. That would make more sense. Again, we need to be very careful what we listen to on the internet, TikTok, most of the time. And good intention, some of it made sense, but if you listen to that and you just apply to, like, okay, let me get a line of credit, leave my mortgage to that, then there would be a disconnect between the mortgage strategy and the financial strategy. It doesn't make any sense. So you can't have those kind of like, oh, I'll leave that as is, pay high interest on that, but use the line of credit because I'll pay low interest on that, and I can use that because the bank is taking the money. It doesn't make any sense. Plus, what he is not touching on, because he might not know, or that might be a different country, is the interest that you might pay or you will pay on the mortgage interest, because you will now have a borrowing to invest strategy, which will be tax deductible. At least portion of it is you will be able to deduct the interest from your taxes. But again, we need to align the mortgage, meaning the debt, and the tax strategy to be able to make that work. DM us here, or you can call us 905-536-4900, and we'll be happy to look at that for you.